Well, good evening, everybody. This is Dr. Keith. How's everyone doing tonight? Happy Thursday evening. Hopefully you can hear me okay and you can see my slide that says data mining for stocks. Can everybody see that okay? Hey, Mike, Brad, John, good to see you guys. Excellent, thanks. Okay, so today, folks, is one of my, well, it is my favorite topic to talk about. Data mining, which I'm going to go into definitions and a few things of what it is, first of all, as we get started. But I get the most excited talking about this because it's something I've been doing now for, well, over 12 years. And technology's made it easier and easier for me to continue to mine and look for good opportunities. And I really am still amazed at folks that don't use these type of techniques, because it gives you a huge edge. So my main reason for this webinar today is to educate you on this, and then from there you can make your own decisions. But we'll be about probably 45 minutes or so. I try not to keep it to an hour. Definitely won't be an hour, but I'll try to keep it to 45 minutes or so, and have some time for any questions and answers, okay, as well. So again, thanks for attending. I'm sure for most of you, it'll be some really exciting material I'm going to cover today. So before we get started, though, again, I must show this for you to go ahead and read. And basically, folks, again, you should never risk money you can't afford to lose. I certainly don't want you to trade with money that you have to pay rent with and so forth. So again, don't ever take that lightly. And if you ever have any questions on that, feel free to reach out, okay? And this is being recorded. So again, those of you, if you end up having to leave early or something, whatever the case is, or it is being recorded, and we'll send that out probably late tonight, so you can listen to it again on the weekend as well, okay? Okay, so today's focus is going to be on what my data mining package is all about, and again, what I consider data mining, and then a special offer at the end for all of you. So first and foremost, again, let's focus on what data mining is, okay? Some of you may already have an idea, some of you may know very well what data mining is, and some may have no clue, okay? But I try to keep things simple with definitions. And it's the probability of an underlying. So in this case, I'm focusing on stocks today, okay? But I have data mining packages for futures and Forex as well, okay? Because again, I trade all three markets based off of high probability trades, okay? But it's the probability of an underlying. So let's say it's a probability of a stock, for example, that's going to go in a certain direction, up or down, during a certain time frame with extremely high probabilities, okay? Or if it's not a high probability, I don't even look at it. Okay, so it's one of those things where I'm only looking at things that have a high probability of going in the direction that it has based off of X amount of years in the past, okay? So the way I like to really define that and explain to people in my mentoring is, I always start out, and some of you are going to be very familiar with this. Do you brush your teeth every morning, right? You're like, well, what the hell does that have to do with data mining? But it's routine, okay? We wake up, we get ready, and we eat breakfast, and we go on our routines, right? Well, that's what big institutions do. That's what big financial traders do. They have routines, and they end up buying and selling stocks, for, again, focusing on stocks today, at certain time frames throughout the year. Many of them have multiple times per year, okay? That's what they do, okay? Why? Again, those of you that are new to my family here, I've got a PhD in finance. I've been researching and trading with my live account for almost 14 years now. And I've been a university professor teaching finance, okay? And the reason I even bring that up is part of my daily responsibilities when I was, a full-time professor was to do research. So I was extremely fortunate to be able to, get ideas and then get it funded by the universities to let me do my work. Okay, so imagine that, right? I'm very fortunate with that aspect because, I spent thousands and thousands of dollars trying things out on the university's dime. Okay. So, the bottom line is there's big movements that come every year, folks. And why? There's always going to be some of you that are going to have reasons. Some of them may be valid. Honestly, I don't care why. All I know is, for example, Netflix moves the first quarter of the year all the time since it's been around. Okay. So then that's going to make me have a trading strategy for Netflix in quarter one. Okay. So that's what matters to me. High probabilities that have been working year in and year out. Okay. So with my data mining package, okay, I basically have what we're going to focus on today is the bulls and the bears, which are stocks. Okay. And I just wanted to show you a snapshot of the functionality that it has. So over here, you have the symbol, okay, and you can sort. It's like they're basically, you can click on these tabs and sort. So you could sort by stocks, and then you can look at them and say, okay, I want to look at all of Apple's potential long or short plays. This is the bull, so this is all long plays, okay? I want to look at all of Apple's long plays, how many they're going to be for the year, right? Or you can look at it, the entry dates, okay? And I'm going to give you some, actual defined techniques that I use to do this. But you can say, okay, like these are some October opportunities and the exit days, okay? And you can sort by percentage profit. You can sort by trades is number of years, okay? Which this is what trades is. So when you look at something like DNB here, it's got 36 trades, 30 out of 36 years during this window of opportunity from October 1 to 12/29. So if you just got in on October 1 every day or every year and exited on 12/29, you made an average profit of 11%, okay, 83% wins during those 36 years, okay? Now, again, let me stress something. When I first started learning mining and doing it, that's exactly what I did. I went in on the enter date no matter what and got out on the exit date, okay? Then over the years, I realized that there's ways to make these odds even better, okay? And I've got specific entries, and you can all have your triggers. I'm going to show you what I've been using. And so what I do is within 2 weeks before the entry date, and then within the duration of October 1 to 12/29 on this example, okay, I actually wait for a trigger within that window, okay? And it's almost like stealing candy from a baby, okay? And this is what you're going to get to see on several live charts. We'll go over some examples, but just imagine if a broker called you up back in the days, right, and said, hey, I got a tip for you, right? This NEE, this Nextera Energy, we're going to go long on October 1st. We're going to exit on December 22nd. Okay, if we do that, you have 84% chance. The stock has been trading 37 years worth of data. It's gone higher 31 out of those 37 years with an average of 8% profit. Okay, most of you going to say, okay, let's do that, right? So here's another example. Broadcom. Okay, I did a snapshot of some October ones. Okay. Broadcom, if you entered on October 20th and exited on January 18th, okay? Again, it's been around less, so there's less years. Okay, it's been around 11 years. It's made money 11 out of 11 years, 100%. So again, and we'll look at this one on live chart. But the bottom line is, again, I'm not going long on October 20th, even though you could, and you'd make an average of 12% if you exit on 118. I'm actually entering within that window that I have the trigger. And again, I'll go in 2 weeks earlier, so if I get the trigger early, okay? And you may have more than one entry during this window, so you can make money, over and over again, depending on your trading style. I like to trade mainly off the daily chart, but maybe you want to do a smaller time frame, a 4-hour chart or an hour chart, okay? You can use this data to your advantage, right? BlackRock, same thing. If you got long on October 25th and exited on 12/29, okay, 21 out of 21 years, right? So again, as a free gift today, right? You can write these down. It's actually going to be emailed to you in a recording, right? But think about October coming up and you got BLK, let's say you get a trigger on, October 22nd, okay? You have extremely high probability of making some money, right? And these percent profits are on the stock themselves, okay? So those of you that trade options like myself, the return's much greater, obviously, right? But imagine that, 21 out of 21 years, folks, okay? Emerson Electric went long. If you go long on October 16th, exit January 6th, 37 out of 38 years has made you money, okay? That is incredible data. And if that can't help you in your trading, then nothing's going to help you, okay? And again, I like to trade. My favorite trades are off the daily chart with my triggers, but you can do smaller time frames, you can do larger time frames, whatever suits your style, or even a combination, okay? And we'll go more into that. Again, I'm just trying to set the stage to show you that this is what technology has allowed us to do nowadays, okay? I do this mining, I update it every year, and there's always new stocks coming in. If something all of a sudden not working, we get rid of them, okay? Everything I have on my data mining spreadsheets are 80% or higher, and then you can sort by, hey, I only want 90% or higher, or I only want, with a percent profit of 10% or greater, right? You get to define all of that by just a clicking of the tabs. So again, I like to sort by underline or by date, number of years. You can play around with it. There's some of over 50 years of data. It's just absolutely incredible what's out there. You can sort by win percentage, okay? You can look at the ones that have made money every year they've been in business during a certain time of that year. What most clients are using this for is they'll create a rolling watch list. And what I mean by that is, let me just back up for a second. So let's say you're going to sort, we're in February, right? So let's say you have your February watch list here, because you can sort by date, okay? And then you create a watch list and you put it in your, if I use Thinkorswim, you put your watch list in Thinkorswim, you call it February data mining opportunities, right? And then when you get a trigger within that window, you know that they're extremely high probability trades, okay? But then you can also get March going, because some of the February will also be March. And so now you've got these watch lists of, I don't know, my stocks for bulls have over 2,500 opportunities each year, okay? But you're basically just looking at things that are all high probability setups, okay? I have some clients that this is all they use. If you don't believe me, let me know. They're more than happy to talk to you, okay? Why? Because there's so many opportunities throughout the year to make money. Why not only look at the ones that have a lot of data behind them, okay? All mine have at least 12 years, but 90% or more have over 20, okay? Like what you're seeing here is 30 out of 36, 31 out of 37, and so forth, okay? Okay, so what I'm going to show you in the live charts in just a minute here is these right here, okay? These are greater than 20 days. So part of my data mining package, down here on the bottom, there'll be two tabs. One are stocks that are greater than 20-day moves. You can see here my number of days, okay, over here on the right. And then I also have one that's less than 20 days if you're looking for shorter term moves, okay? Obviously, there's a lot of reasons to do that, right? You might be looking to get in off a smaller time frame, or do a, as you know, those of you that trade options, right? The shorter the time frame, the cheaper the option, right? So you can maybe take some huge advantage of those type of movements. But we're going to go through each of these greater than 20. Okay, so again, these are all these that you have the recording that you can use for this year. Okay, I just picked a snapshot of September. Okay, and then I'm also going to show you some less than 20 days here. Okay, and then if we have time, I'll talk about some shorts as well. Okay, again, there's a whole spreadsheet on short plays as well. Okay, all right, so let me go back to, and I'm going to bring up my charts now. Okay, so again, if you just, thanks AJ, it's good to hear for sure. So one thing, can you all see my Thinkorswim charts? Before I start talking on this, I want to make sure you can see them. And again, as I go through here, folks, it doesn't really matter what indicators you're using, you know, because the real power is the data. Okay. Again, I use my Laguerre RSI here and the Hackenacci dots. And then for demonstration purposes, I just put a 50-period moving average so you can see the overall dominant trend. Okay. And so I kept it simple, but you know, you can use whatever you like. There's the real powers behind the data behind it. Okay. All right. So as an example, I wanted to bring up the NQ, the E-mini NASDAQ. Okay. The reason I wanted, you know, I get a lot of questions on, you know, where the market's going and that, where there's some really good seasonal plays throughout the year that's captured. Okay. For example, it's kind of crazy too. Okay. From February 8th, okay, so from February 8th to February 19th on the NQ, 14 out of the last 15 years, it's gone higher. Okay. You would have made about $2,000 a contract. Okay. So again, nothing's guaranteed. We all know that. But my point is, we're in a window right now of the next few days that's really bullish. Does that mean every day is going to go higher? Of course not. Probably not. But what it's telling you is 14 out of the last 15 years. So where would my trigger have been? So where this white line, the Laguerre line, started curving back up with this green dot, okay, this was my new entry opportunity, okay? And I know between now and the 19th of February, there's a high likelihood that this is going higher. Or if I already made 2,000 a contract, I'm going to protect myself. Okay. So again, just trying to give you some ammunition there. You keep an eye on that for yourself. Okay. Okay. So let's talk about MTD. Okay. So again, I just picked a snapshot for you all of some September opportunities coming up. Okay. In September. Okay. So for MTD, if you entered on September 1 and exited on December 3rd, 22 out of 23 years, you made money, average 14%. So again, just think about that before we even look at the chart here. 22 out of 23 years, it's gone higher of an average 14% on the stock itself between 9/1 and 12/3, okay? So I got a lot of data on this chart. This is a daily chart. So each candle, okay, is a chart. I'm sorry, is a day. Each candle is a day, okay? And yes, I use Hackenacci. We don't need to go in all that. It's not important right now. But here's my trigger. So I'm right around September. So even in August, I look for longs. But here's the real trigger right here. See this, where the white line came up, and then on October 5th, we got the long play, okay? So October 5th, knowing the probabilities are extremely high, okay? And then obviously it's made its move to up here, okay? And there's always re-entries, okay? Depending on your trading system, smaller time frames. If you're using a MACD or something as well, you can always get back into these trades, okay? But one, if you just went in on that date on 9/1, okay, right here, and exited on 12/3, okay, it made money again, right? It made money again. But my point is, that's riskier. If I wouldn't have got a trigger, I wouldn't have taken it. Okay, so that's how I improve my odds even more. Okay, and this was a really nice opportunity. But again, what I'm really trying to get you to focus on with this type of technology, okay, is this. It's gone higher 14%, the stock price itself, 22 out of 23 years. Why is that? What's going on? Okay, people that move the market, institutions, banks, high frequency traders, that's a window they buy. Why is that? I could care less, never done any research on MTD on why that might be. I don't really care. All I know is that 22 out of 23 years has done that, okay? And I know I get fired up on this stuff because this stuff is amazing. All right, so let's look at ICE. Okay, so ICE, if you got in on September 30th, okay, so let me go put my cursor on September 30th, okay, right here. And then you exited on 12/7, okay, which was up here. It's made money, which obviously it would have, right? 14 out of the last 15 years, okay, 11%. But again, that's not how I'm actually playing it. What I'm looking for is a trigger. So right here, you're in the window, 925, you get a trigger right here, okay? Right here. If you didn't take profits there, did that work out? Depends how long you held it, right? Typically, when I exit a trade, if I get into a trade, okay, I'm going to exit when the Laguerre triggers the opposite direction as a general rule, right? So that's more of a break even. Then you can get right back in here on 11.4 because it's within that window, right? And then you took it up to highs, okay, potentially, anyway, okay? But we knew with over 93% probability from what's happened in the past, okay, Intercontinental Exchange Incorporated heads higher, okay? And again, you can go to smaller time frames during that window, okay? You can go to an hour chart, a 4-hour chart, a 30-minute chart, knowing that when the bull moves happen, okay, you have great opportunities to make money. All right, Travel Corp. And I haven't looked at these ahead of time, so that's why I'm just looking at, I mean, I haven't looked on the chart. So on September 27th, and if you exited on December 6th, 31 out of 34 years, folks, almost 10%. Okay, so again, think of the power. The more than the years, the more certain, right? 31 out of 34 years has gone almost 10% higher, 91% accuracy. Okay, so again, we had our trigger beautifully on 10.5. Okay, and there it went. There it went. So those of you that like to do 3-4 month option plays, you know, phenomenal return. I mean, you know, something like this, if you opened up, you were at 110, and obviously, you know, I mean, actually my divergence caught the top, which is pretty funny. But my point is, you know, whatever your exit strategy is, right, you made over 100% return on that option play, okay, or at least you should have. And again, why is that? Well, because 91% of the time it goes higher. If I didn't get a trigger during this window, I'm not taking it, okay? We just wait for the opportunity with the triggers. It's not that difficult. Broadcom, one of my favorite seasonal stocks to trade throughout the year. There's many seasonals in Broadcom, okay? But here's one that's from 9.5 to 11.6, okay? It's gone higher. So again, a couple opportunities here, couple opportunities, bam, within that window. Or maybe, you know, there's more techniques that I'm not going to go into today. It's not important. You can just see the uptrend, right? So you can grab that uptrend. You can go into a smaller time frame. You know, the actual trigger when you had the Laguerre come was on 11.4, and you know, it's gone up to new highs today, in fact. Okay, but again, high probability opportunities. Agilent Technologies. See this nice uptrend, first of all, right? 929 to 1210, 19 out of 21 years, it's gone 10% higher. Okay, so again, I just want to keep repeating myself tonight. If somebody called you up on the phone and said, Keith, with 90% accuracy over 21 years, basically the month of October and November, Agilent Technologies goes 10% higher, do you want in? You're going to beg, right? Well, you have this in front of you now, folks, okay? So again, right here's the trigger. It actually, perfect trigger on this example, okay? Bam, bam. But there should be really, you're just waiting on when do you take those profits on these type of opportunities, because it's worked 19 out of 21 years. And I bet you if you go back and look at the 2 years it didn't work out, you may or may not have gotten a trigger, right? Sometimes trades just don't work out no matter what the odds are, but we may not have gotten a trigger on those 2 years, okay? Not important to me, because as long as you manage your risk, you're going to win more than you're going to, way more than you're going to lose. And if your risk is less than your, you know, your overall reward on some of these, then, you know, it's a non-issue, right? OMC. So on 930 to 119, okay? 930 to 119. So an opportunity is right here on 10-1. You know, again, depending on how you protect yourself. Then there's another long, this is a combo long, which is a fantastic opportunity when you get the combo long, and there you go. Okay, there it goes popping. But you may say, well, that shouldn't be that surprising because look at this, folks. 36 out of 40 years. Okay, 36 out of 40 years. Bill says, may I inquire why we're looking at opportunities 7 months out. So what I wanted to do was this. I wanted to be able to show you without having to keep scrolling back or scrunching the screen too much a month last year and show you how this technique works. Okay, Bill? So that's why I picked September. You can easily see it on the screen. And then again, you can play the game. Where is, based on your entry techniques, let's say you use a MACD, okay? You can then look to see when your entry technique would have been, okay? I mean, the data is the data. I don't know how else to say it. 36 out of 40 years has gone 11% higher during this window, okay? So take it as you wish. If this is not for you, no hard feelings at all. Absolutely, okay? Exactly. Does that mean if something's worked 50 out of 50 years, it's going to work this year? Absolutely not. I'm not here to sell you anything you don't want. What I'm here to is give you probabilities for you to be successful. Okay. Okay. And let's look at one more on this particular thing. So Autozone, they've been around 29 years. Okay. They've made money during basically September, October, and November. Okay. From 9/2 to 12/7, they've made money 26 out of 29 years. Okay. About 13%. Okay. So again, sometimes you can look at something as well and you can say, you know, look at this zigzag environment, you know, I may not like it, right? Or you may say, you know what, with those odds, I'm going to take every trigger, you know, I'm going to take every trigger. And this year, this particular past year, if you got in AutoZone here, you didn't really make any money, okay? Unless you stayed in it until, you know, further along. So again, does it guarantee when this is updated now, is it going to be 26 out of 30 years, you know, 87%, you know, absolutely it could be. Okay. So again, I did not back test any of these before today's webinar. I just grabbed it from my spreadsheet and showed you how I would look at it. Okay. And we were in a nice uptrend and then it came down below the 50 period moving average and it's going sideways. So this is a riskier opportunity, but again, with 90% probabilities, you know, I still like the odds, whether it works or not, right? What do I prefer? Well, I prefer trending, much more trending environments, okay? But you get to digest the data any way you wish, okay? Got it? Okay. All right, so let me go back real quick here. So now I wanted to show you something. I've never done this before, okay? So those of you that have watched my data mining webinars in the past, I'm going to show you a technique of less than 20, okay? And this is going to be February snapshot, small snapshot of February, okay? And what these are, folks, is these are long plays, less than 20 days. So you can sort by number of days or you can sort by profit or date and say, okay? Well, let me just kind of show you how you can do this, okay? And I'll read these off when we get back to the charts. Okay. So applied materials. All right, we grab my notes. So applied materials to February 1 to the 18th, okay? So on a daily chart, February 1 to the 18th, okay, you got a trigger right here on the 5th. But the problem with the smaller time frames, the Laguerre's not always going to, you know, work out in that favor, right? So what do? On these shorter time frames, I love the, oops, I hit the wrong one. I love the 4-hour chart, okay? That's what I like. You may have a different strategy. Okay, so what I'm looking for is during that window, okay, I'm looking for these long opportunities, okay? And you're gonna have multiple ones. So if you're looking for an option play, you know, you may get the trigger off a 4-hour Okay, let's say you took this one right here as an example, okay? And then you decide when you want to exit. I have my own exit strategies. I teach my own, the exit strategies. You may stay in it until you break a moving average or you're up a certain percentage. But the bottom line is during this window between February 1 and February 18th, okay, you can keep taking these long plays as you get them with high probabilities, right? Because remember, 31 out of 36 years, they've gone higher, okay? Or maybe you say, you know what, Keith, these odds are so good, 86% accuracy, 31 out of 36 years, 8% profit. I might just go in on February 1 as a shorter term and then play it by ear, okay? I don't do that. You certainly could. Again, the data doesn't lie, folks. All right, so let's look at URI. So Brad asked a great question. Some of these seem clumped with earnings. Okay, absolutely, because companies also have a likelihood of purposely playing earnings games, right? I don't care. Nothing I'm analyzing. All I know is, again, think about this particular example first, URI. This has gone higher 13 out of 16 years, okay, 81% accuracy. So in my opinion, not bad, but we have way better ones, right? But it's still there because it's over 80% accuracy, okay? So, what I'm looking for is when we get a long trigger, like just recently here, earnings was over, and then we get that long trigger, right? That was a nice play, with extremely high probability that we're gonna head higher, okay? Now, I would say there's more risk with earnings, okay? But what you have to remember is this data is year over year over year over year, right? When we looked at applied materials, right, 2.1 to 2.18, okay? Let me go back to the daily just for a second. Okay, so 2.1 to 2.18, right, earnings is on the 18th. So in this particular case, earnings isn't a factor, okay? Because I'm bringing up February's right now, you're gonna see some earnings, right, just because there's a lot of earnings coming up, okay? But it doesn't really matter. The odds are the odds, right? And companies have earnings 4 times a year. Here's ALB. So again, I'm back on the 4-hour chart, okay? We know in this case, so here's a great example, okay? We had a nice uptrend back here, right? You could have made your money. But then when it is a simple, just as a simple strategy, when it breaks that moving average, and this is just a 50 exponential, okay? You may decide you don't want, because there's so many other opportunities, you may decide you don't want to take this long play on a 4-hour chart until it closes above that 50 period, right? That way, my point is, right, this is a 80% accuracy trade. You can make it higher yourself just with a simple strategy like a moving average, okay? What I'm presenting you with the data, you have to have specific dates to mine. You can then improve the strategy based off of your, scalping of enters and exits, okay? Let me give you one more example here. Okay, so PBI, okay? So from 2.2 to 2.15. Okay, so from February 2nd to February 15th, 32 out of 39 years has gone higher, okay? So again, that's a lot of data, right? 39 years has gone higher, 32. I like my odds on that, right? So as you get closer to these entry points, the Laguerre right here, you never have any idea what's going to happen, right? Wouldn't that be nice if that happened every year though, right? You got in on the trigger here and went up to 19. But my point is, we can't predict those type of moves. The average move is only 5% on this example, right? But then when you get these type of moves, right, that's how you really build your account, okay? All right, any questions on that? So again, you can use smaller time frames on the data mining. That's less than 20 days. I mean, you can do the same strategy on a 4-hour chart with the ones greater than 20 as well. I mean, I know a lot of you like to do options that are only a week out or so, right? You like to make your money and get out, okay? And you can use those type of strategies, okay? All right, let me go back to the slides for just a minute. So again, let me look at some shorts here. So Alcoa, if you went short on 9/3 and you exited on November 16th, 40 out of 50 years has gone lower 11%, okay? So again, that means 10 years it didn't work out, but probably with a good entry technique, you could improve that, right? Maybe to 85%, maybe 90, we don't know, okay? But again, let me just bring Alcoa up. September 3rd, okay? So my entry would have been 831 right here, and there's that move, okay? There's that move. So where could this keep you in trouble? Let's say you're not looking for short plays, right? Maybe during that window, you don't take the long plays though, right? Because there's a higher likelihood of it going lower, okay? So again, there's bulls, there's bears. I certainly spent about 95% of my time on the bulls, okay? Because we've been in a bull market for years and years and years. But there's some great opportunities where there's shorts, okay? And again, you can just play that by ear, okay? But there's a lot of opportunities out there on both sides of the market. All right, so what I wanted to offer you, I'm going to put it in the chat, okay? And again, you will get this recording. This is the special offer where you basically you get the bulls and you get the bears for free. It's half off, okay? If you are into futures and Forex as well, I'll put that in the chat for you for the futures and the Forex, okay? Now, one of the questions, so we've got plenty of time here, okay? Let me just show you this slide. So that we also have it for the futures and the Forex. I started out trading futures, okay? That data mining package is fantastic. And with this special deal right now, you get 2 free years of updates, okay? So if you buy it today, you get two additional years of updates as part of this package, okay? Now, let me show you. So one of the questions I had was this: how do I use my seasonal with that? So let me bring up something like a high probability of, Broadcom trade, right? Yeah, so I have, different seasonal techniques as well, okay? And you can see over here, and that's not the purpose of today's class, okay? But you can also look at it and say, okay, what is Broadcom's opportunity? So, as an example, if we know in September it typically goes higher, okay, then what that allows me to do is I can look at my forecast. This dark red is the forecast, and at the peaks is when I can have my options go until. So, if it was right now was a seasonal, maybe I say, okay, I'm going to look for a September expiration or a June expiration, because that's where they typically top, right? And then you get the decline, then you can go back in type of thing. So yeah, I like to use different techniques with that, but if I could only have one tool to trade, okay, it would be data mining, because the advantage of data mining is that it's basically the pattern since a stock has been in business. So if there's no seasonal advantage, it's not on the spreadsheet, okay? And so you basically have this library of high probability trades all year round. It's like putting yourself with the best of the best, okay? If you want to be successful, you hang out with successful people. It's the same philosophy. You're basically looking at what are the big institutions, what are the hedge funds, what are the large traders doing? When are they buying? When are they selling? This is what this type of data gets for you, okay? Yeah, sure, Bill. So Bill says, can I clarify what's in the package? Absolutely. So basically what you're going to get for the bulls and the bears, you're going to get 2 spreadsheets, okay? You're going to get the bulls, which is over 2,500 trade opportunities, okay? And the bears. Within each of those, there's a greater than 20 days less than 20 days tab. Okay, so that way, based on, you can look at them both, or some only look at greater than 20 because they're looking for more, swing trades versus like shorter term trades. But you basically get two spreadsheets, master spreadsheets that you can sort, tailor. Okay, and then what I'm also going to do for people that purchased today is, in a couple of weeks, I'm going to hold a webinar for everyone that purchased, and answer any questions that you have, or walk you through any examples that you want at that point as well. Okay, but it's super simple, because you'll just click on anything you want. Like, let's say again, you get it and you want to start looking at March. Okay, you can sort by only March if you wanted to. So that way, for right now, you're just focused on the March ones. You can create your watch list or print it out and have it in front of you. And then when you get your triggers within that window, you have the data in front of you on the percent probability of making money. Okay, and absolutely nothing's guaranteed. But what this is telling you is, again, OMC, 36 out of 40 years, it's gone 11% higher, okay, on average. Okay, that's 90% over 40 years. I will take those odds all the time, okay? That does mean 4 years that didn't work out, okay? But with defined entry techniques, you can even improve that, okay? So some of you are just gonna go off the dates. I know that, okay? Again, a lot of my clients say, you know what? I know there's probably a better way, but you know what? If I got 96% probability just by entering and exiting, I'm just gonna do it. I don't have time, right? So obviously that's up for, that's up for everybody if that's what they want to do, okay? But that's what you get. And then, and then I'll hold a webinar and make sure that everybody is happy with understanding, how you find those type of trades, okay? All right, are there any other questions? Again, one thing you should do if you don't, I have a Wednesday webinar. So I just put in the chat, my information. That's my personal cell phone. But I have in there my YouTube channel. Okay, and my weekly webinar. It's a free webinar that I do every Wednesday. Okay, and I record those. So you should register for those. Okay, I go over a lot of different ideas of my systems, as I'm doing it, showing you opportunities and so forth. Okay, so don't feel like you have to attend. If you're busy, it's recorded and it'll be sent out to you. Okay, and then yes, so somebody just asked for a link to the special one more time. Let me put that in there. And again, you'll be getting an email, but there's the link. So again, folks, what I really wanted you to understand tonight is there's ways to have high probability setups. Institutions do things over and over and over again. Okay, and every year new opportunities come in, some go away, but it's a fantastic opportunity for you to really get ahead of the market. So with that, folks, again, thank you so much for attending. You should see the recording probably late tonight, first thing in the morning, depending on how long it takes to get out, but reach out with any questions. Okay, all right, folks, thanks again, appreciate it. Thanks, Alan. Have a good night, everybody.